Live here. So Up Fridays. I'm coming to y'all 1 sec. I gotta do all this stuff. I can't believe my laptop did that. I'm gonna do a hard reset when we get done. Make sure I back it up first.
Yeah, it's funny how just restarting your laptop just fixes whatever the problem was. It just goes away.
Yeah, like I know my MacBook just did an update, so I don't know if it's that. So ain't no telling. I'm gonna show back everything up, make sure I'm covered.
Yeah, absolutely. We love technology, am I right?
Right. All right, y'all. So
Yep.
happy with Up Doe Fridays. I think I still owe y'all one of the affordable house when I had got busy, so I'm gonna do that one. But anyway, we got Thomas back. We had technical difficulties today and the last time, so I apologize for that. But a couple church announcements we got. Detroit Real Estate Weekend is the first weekend in August. We have VIP tickets still available. I took away the hotel option for now because most of them are full, and we still got workshop option. And then if you don't want a hotel, we got those options too. But that is August the 1st through the 4th this year in Detroit. So here I have Thomas. Thomas, would you like to introduce yourself?
Sure. Hello, everyone. My name is Thomas DeLegge. Thank you for tuning into this Memorial Day weekend edition of What Up, Though. Uh, I am a private equity lender. So we do business to business loans. We can do any loan through SBA 7A or 504. Pretty much, we do any loans that are, I'll say, $25,000 and up, going into the billions. But really, my job for Brightview is for the real estate investment property side. So, what does that mean? So that means that I fund fix and flip properties, long-term rental, DSCR loans. I can do cash out refinance or for your rate and term. I can do ground up construction. Pretty much anything from a condo to a hotel or even a large apartment complex. I can fund it so long as you don't live in it. And even if you want to live in it, there may be some options.
Okay, so for the funding,
Mhm.
um, up to what size apartment building do you do, or is there no limit?
So we can do any size apartment complex, but I'll say after you hit 4 doors, it becomes a commercial property.
You said after 4 doors.
Yes. So after you hit 4 front doors, it does become a commercial property.
I think that's standard.
Yeah. Yeah, so that's usually pretty standard. But so the lending kind of, I don't want to say it changes, but it is a different form of residential lending. So I can say through my channel of being a direct lender, we could go up to, I'll say, 10 to 12, actually scratch that, 20 doors because I think we increased our limit. So 20 doors, and then beyond that, we would probably look into something more commercial like an SBA loan, perhaps, or maybe there's something larger on the commercial lending side for investment properties that we could look into. It'll really depend on the property you bring me and when we go to underwrite you as the borrower, we'll find the best product that's out there.
What about new construction? And if so, is it just residential? Can you do up to a 4 unit?
So I can do ground up construction. So it's funny, I actually just got out of a meeting today where we were talking with a large investor here in Richmond, Virginia, that wants to buy, I can't remember the size of the lots, but I think he said 32 lots, 34 lots, and he wants to do ground up construction. So we can do that. So we can do large, massive ground up construction on projects. We can do, if you want to do a row of condos, we can do that. If you want to build a apartment complex ground up, let's say you want to do 64 doors, we could do 64 doors. It just really all depends on how much your loan will cost and what you qualify for.
Mm. Okay, so like me personally, right? I have a two-family that I
Mhm,
need funding for. It's a duplex, so it's side by side. So I'm probably gonna need
mhm.
about 250 to really rehab that one because it's gutted to the stub and it's like massive. And then I got the lot behind it that I want to build two more on. So technically, I want to do 4 units. So is there a loan where I could do that, or do I need to rehab it first and then do the new construction?
Well, we could do there's a lot of ways we could navigate that. Really, I will say it's will be dependent on what's more important to you, and I'll say also maybe there could be a time if you're on a time crunch, if you're not. There's a lot of ways we would analyze that. So one way I would say we would you said that there's nothing currently erected for that second duplex?
No, it's just an empty lot. So
It's a plotted land?
the current duplex is gutted to the studs and ready for rehab. So I
Right.
applied for a couple of affordable housing grants, but I haven't heard anything yet. I think
Mhm.
I don't know. They said we'll hear sometime in May, so the end of May is next week, so maybe early
So,
June. But I'm trying to
uh,
come up with like a plan B just in case, without using my
absolutely.
own.
So, I might have a plan B and C for you right off the bat here. Uh, how much rehab do you think you would need to put into that?
Oh, I'm gonna need about 250. It's huge.
250.
Each
Okay.
each
So,
side is like
let's scratch C.
probably like 16, maybe 2,000 square feet. Like it's big.
So an avenue I was going to maybe suggest is from what I suggested last time and introduced was 0% interest credit cards for 7 to 12 months. So again, just to reiterate from last time, the average approved line of credit through that is $70,000. And so I have a pre-qualifier link that I can even put in the comments here if I can. Let's see if I can connect my YouTube channel here to comment. Um, Yeah, so we have a link where we can get you pre-qualified and, let's see if I can't get that link in here real quick.
Is it my link
So,
or something different?
it's something completely different. So this is something new that we have, one of our new programs for, credit cards where it's failed to post. I'm not sure why that failed to post, but, maybe here if I can private chat it, perhaps?
I'm on StreamYard, but if you're on YouTube, you should be able to just comment it.
Yeah, let me see here. Um, it's okay. Do you see it in the private chat by any chance on here?
Oh yeah, I see it.
Yeah, so that link will take everybody to the pre-qualifier, and so once you fill out that information, it'll give you a grade of metal, like aluminum, copper, silver, bronze, gold, whatever you qualify for, and once you come back to me with that, I'll be able to break down exactly what you qualify for in terms of the line of credit, and then we'll connect you with our, specialists where they have plenty of programs that they can find the best, credit card or line of credit, either personal or business, that'll help you out. And so keep in mind, this line of credit can be used for a down payment. It can be used for rehab, or heck, you could use it to purchase a property completely if be covered under your line of credit.
Mm.
Um, so there's many of ways that you can use this, even in private equity like this. Say you have, well, I don't want to say that could qualify for liquidity, but there's many good uses for this line of credit. One of them being rehab on stuff like this. And so as soon as you do the rehab, get an appraisal, do a cash out refi, pull the money out, pay off the line of credit, and then pay it off over time with the refinance. So there's definitely ways to strategize, especially with a gutted duplex, and you want to build one behind it. So I would say, if you don't, do you have any financing currently on that duplex?
No, I own it free and clear. I don't owe nobody on there.
Okay. Do you know what it would appraise for currently?
Right now, the last offer I was told was like 150. Cause of
Okay.
where I'm at, like I'm in 40. Well, you probably don't know this, but
Okay.
I'm in 4214. I'm in East Village, which is right outside of Indian Village, Island View, and
Yes,
West Village. It's called the Villages, so that's a very booming neighborhood in Detroit
I
right now.
gotcha.
Yeah.
I gotcha. So what we would probably do is we would do something either called a delayed purchase, which essentially is a fix and flip loan, but it's after you've bought the property. How long have you had it?
Oh, 2017.
Okay, that's a little far back for for
Yeah.
delayed purchase.
I
Okay.
didn't, I
So
I only paid 2,500 for it, so I've been
no,
sitting.
hey, that's a solid steal right there. Yeah.
Yep.
So okay, maybe not delayed purchase, but we do have bridge loans that would include rehab, if you're mid-rehab. I'd say so this if it's gutted, you could definitely say it's mid-rehab. And then fix it up that way, and then when you go to appraise it, you go to pull the cash out from the new, appraised value, right? So you have more equity in the property now, and, take that cash out. You could use that cash for the ground up construction financing, and then, of course, you would probably wanna have tenants in that currently, fixed up duplex so you could, pay off that refinance, right behind you for, doing that ground up. But, there's definitely a plan there in the works.
Yeah, because in the perfect world, I want to rehab it first. Like you
Mhm.
said, get my tenants in there, which will more than likely be Section 8 or insert program here, and then
Sure.
build two more and do the same. But I also got another property I own free and clear that I'm renting out that I end up not selling for whatever reason. It just wouldn't sell. It was a flip, so I end up renting it. And it's like beautiful. Like, so I think the appraisal came back like 210. So I'm
Mm.
wondering maybe I could pull the money out of that one
Yeah,
because
yeah,
then
if
I
it's
could
free
go
and clear, yeah.
income, yeah, and then use that money to rehab the other one.
Absolutely, yeah. So I would say that we could go up to 80%, loan to value on a cash out refi. And keep in mind we don't have a seasoning period. Um,
Okay.
and even with programs like that, based on your credit, based on where the property is, I would say maybe even 75. Um, so really, it just we would have to underwrite the property and underwrite you as a borrower to see exactly what you qualify for. So I'll say your credit does matter in this sense,
Mm,
because say someone with a 650 won't get won't be qualifying for as much LTV as someone that say has a 750, right? So 750, you're definitely in the 80% range if you own it free and clear. And even if you don't, say you only have 50% equity in the property and you're still financing the other 50%, we would just roll that into the refinance and you would pull that 30% equity out in cash and then just refinance what you currently still owe. And so now you have an 80% LTV loan at today's rates, and I think right now we're in the I want to say low eights for cash out refis. I mean, I'm even seeing the sevens still today.
okay. Another question: can I just
Mhm.
use my business credit like 100%, or do I gotta co-sign for the business?
So it has to be personal credit. So it has to be your FICO score.
All right. That's for
Yep.
all the pro. That's for all the loans.
Yep.
Ooh, okay.
Yep. And so, well, one of the things that we are able to do, we are able to provide financing for even low to no credit. And so, say your FICO is somehow 560, somehow for whatever reason it's down there. We do have financing that's available. It'll just cost you more in the loan because the lender will have to, they're taking on more risk because your credit is not reflecting that you're making your payments on time. So it's a bigger risk on their end. So yes, you'll have to bring more skin in the game.
So do y'all put the house? Basically, I would have to put the property up as collateral. I would assume.
Yes, yes. So these are asset-based loans, and so the lender will want to come in with a first position lien. It's rarely ever that they'll want to sit back in a second position, but it's not unheard of. So we also have for commercial properties, not so much residential, but commercial, we have 90% CLTV, and so that's where the lender will take a 75% first position, and the seller could take up to a 15% note on the second position.
Okay.
Yeah, so you would only have to come to the table for 10% down payment for a commercial property.
All right. So I remember before you said something about that you all do double closing funding as well. Could you kind of explain that to people who maybe wholesaling on here, or I might need it because I
Sure.
wholesale too?
Absolutely. So we do transactional financing as well. So, the laws say, I don't know how they are in Detroit, but here in Virginia, the laws are updating, whereas I think of July 1st. If you are a wholesaler, you do need to obtain a license. And if you fix and flip any properties, actually not any properties, sorry. If you fix and flip more than two properties within 1 year, you do have to obtain a license.
Oh
And
wow.
so, yeah, so they're getting very strict because there's been a lot of wholesalers that I'll say, are brokering, and then their brokers are brokering. And so there's not only that, there's other madness that goes on where wholesalers have not been, I don't want to say not been professional, but there's been a lot of hectic deals that have caught the attention of the local government. So it hasn't been very friendly to the whole real estate investment community, and so it did not paint a good picture. And so laws are getting very strenuous, but we're working on that in the background here locally. First and foremost. But so transactional financing, for that we do charge 2% of the loan amount for transactional financing. So when you go in as a wholesaler to do closing, you can go in and double close. So as long as you use the same title company for both closings, you are able to do that.
Mm-hmm. Okay. Let me see. So it was one loan. I forgot what it was called that you spoke about earlier. That the minimum loan amount was 75,000.
Yes. So uh, well, there's a couple. So a lot of things have changed on our end, and I'll say was it been 4 or 6 weeks since I was on here?
Yeah, it wasn't that long ago, but that's crazy.
Yeah, I know. Time has just flown by. We're already almost at the half point of the year. But yeah, so we've updated our financing a little bit. We are still able to do $75,000 loans. In fact, I just closed one 2, 3 weeks ago on a long-term rental purchase in Petersburg, Virginia.
Hmm.
And so as long as the property value is $100,000 or more, we can do long-term rental purchase financing, and that loan value does start at 75,000. I'll say for fix and flip financing, we can do 75,000 plus with the rehab not to exceed the purchase price, or 70% of the ARV. So, I will say that with our 2 programs there, those are really our core programs, and so what I am encouraging investors to do today that are interested in doing long-term, buy and holds, is to consider the BRRRR method. So, essentially, that means that you would acquire a property, fix and flip it first, and then refinance into long-term financing. So why would I suggest that, right? I'm not interested in doing rehab. I just want the property to hold it for rent.
Hmm.
Yes, but so the qualifications, or sorry, not the qualifications, the coverage in a fix and flip financing loan, we start at 85% purchase and 100% of your rehab cost. And so, because of that, that's for fix and flip. On the other side, for long-term rental, if you just go straight into purchasing a property for long-term rental, a lender is going to want you to come up with at least a 20% down payment, and oftentimes it's usually 25.
Hmm.
So, and then say your credit is even 650, they could even ask you to bring 30% um, of a down payment. So realistically, I don't know about anybody else. I would much rather pay 15% as a starting down payment where you could pay even less. And the more experienced you are, and the better your credit is, and say the property is not in a rural area, you might even be looking at a 90% loan to cost. So that means that they'll cover 90% of your purchase and 100% of your rehab if you're even more experienced. And so that's a 15% starting down payment versus a potentially 20, and that could even be even more. So you go and put down 15%, your rehab budget is covered on a reimbursement, and so now you're raising your value of your property. And so when you go to refinance in the long term, say your ARV goes up even enough where now you can pull some equity out of the property in cash. Well, now you've got, you're refinancing the long term, you already own the property. You don't have to put down that 20% that you would have to traditionally with purchasing a long-term rental, and you've increased the value of your property, you can potentially pull cash out. So, and just repeat the process, keep buying more properties and go acquiring more financing. And eventually you'll have a decent portfolio of properties that's paying itself off with the rental income. So definitely a good strategy is the BRRRR method for investors.
Yeah, that sounds good. I'm just making notes.
Absolutely.
All right. What other programs did we miss any?
Well, we've got cash out refi, we've got long-term rental, ground construction, fix and flip. So with fix and flip, I'll say if we have any Virginia viewers in the state of Virginia, we can get closings done in 2 weeks. I'll say I've even done 10 days. Has been my quickest. And so for fix and flip in Virginia, we do not require an appraisal. We do not, yeah. So in lieu of an appraisal, we require an inspection, and I say inspection, but it's really an inspector is walking through with a camera so that the lender can see that there's not a gigantic crack going from the corner of the wall to the other corner of the wall. Nothing major is going on that's
Mhm.
unexpected in your rehab budget, and so that really allows us to um, go through the loan process pretty quickly if you have your ducks in a row in terms of your documents ready. And so really we don't ask for a lot of documents in that. We really ask for your 2 months most recent bank statements to see your liquidity. We look for your entity documents for purchasing the property. We look for photo ID. We don't really ask for a lot. Purchase contracts, rehab budget, and then there's a credit authorization form, and really beyond that, it's not much else. Maybe a loan application, but that's it. Really, it's just those main 7 or 8 documents, and that'll get you in. And so, we have options for insurance and title as well that can get an investor a much quicker process than it would with other title companies that are out there where we've had quite some experiences, even some right now, where we're waiting 2 weeks for a clear title. Versus our guys can get it done. They're used to investment properties. Unless there's something wrong with the title, like there's a contention where somebody else has a stake in the property potentially, stuff like that can tie it up. But traditionally, our insurance and title guys can get it done within, I'll say, 48 hours. And
Mm,
even same thing with insurance. We can quote and bind within 48 hours.
that's great. Okay. What else I was gonna ask? Blah blah blah. I think that was all my questions I had. Cause you
Yeah.
talked about the double closing. Um, so the absolute minimum, because I know people gonna ask me this for credit. What does the absolute
Mhm.
minimum have to be for like all of the programs, or for each program? Is there a different, excuse me, credit requirement? Hello, you're muted. Hello, I can't hear you. You sound like you far away.
Whoa, hang on. Just one second. I have a mic right here.
Okay.
Let's see here. Should be this one. Oh,
Oh, we do got some questions. If you wanna answer those before you go talk about the credit score and stuff. Let me see.
all right. Can you hear me?
Yep. Welcome back.
Hello?
Yeah. Can you hear me? Hello.
Not again. Come on. What's going on?
I don't know. They don't want us to be great, but I can hear you though. I don't. I guess you can't hear me.
All right. Now I can hear you now. Okay.
All
Sorry
right.
about that.
So, do you want
Uh,
to talk about that first, or you want to answer some questions first?
I'm good for either.
Okay.
Here.
We do the questions first, because
Sure.
how much cash should one have to start flipping?
In one half to start flipping.
Like, I guess how much they got to bring to the table. I'm assuming.
I always say a safe number is to bring at least 20% of your of what the property value is when you come to the table. Um, so yeah, I always suggest 20%. So even though we can qualify you for 85% purchase, 100% rehab with a 650 plus, Things can happen with your loan where, the deeper we get to not investigating, but underwriting the
Mhm.
property yourself, the deeper we get, the more we find out. Like, let's say the property is deemed rural, the town has like a population of 1,000, that's a risk to a lender. So they'll want to fund a lower percentage because it's a higher risk for them. So they'll want you to have more skin in the game on that. Or say, even, let's say something pops up, with a fix and flip. You don't know, Asia, I know you know this. You don't know what you're working with until you tear those walls down.
Facts.
So, right. And so your rehab budget is based on what you see, not what you didn't, well, not what you can't see. So we
Mhm.
do have options that can perhaps help you through a rehab budget where it's required to change or increase. So we tried a lot for that in the rehab budget, but just in case, that's why I always say bring that 20% of the purchase, just in case. We don't want anybody to go halfway through their budget and realize they have to increase it, and now they don't have enough. That's no fun for anybody. So yeah, but
Okay.
yeah.
So one person wants to know, do you cover Maryland? So I guess maybe you should say what states you do cover or do not.
All 50 states. And so I will say that the four that do tend to be tricky, but we do still lend, is North Dakota, South Dakota, Alaska, and Montana. I will say those are the tricky four because of them being rural. But we do offer fix and flip. We do offer long-term rental, ground up, all 50 states.
Okay. Yeah, somebody else asked too, would they land in Maryland or Philly? So I
Yeah,
guess y'all getting a lot of Maryland was because Baltimore with the new, I don't know if you've been seeing what's going on there with the dollar houses and stuff like that.
I haven't. It's
Yeah,
news to me.
so it's something about some dollar houses, and then I think the requirements is you gotta the city is requiring that you show at least like 90,000 or something, that you have at least minimum to do the rehab. So they're not just giving them to anybody so they can sit on them. So I guess that's probably why a lot of people asking about Maryland.
Wow, and the locality is doing that? Or is that the state?
Yeah, it's the city doing it.
Wow. Wow,
Detroit,
I'll have to look into that.
Detroit did that, so that's a good sign because Detroit did it some years back. We had a dollar house program.
Hmm. Yeah. So one thing I'll note is if they need to see that you qualify for a certain amount of financing, we are able to do pre-qualification letters. Um, so pretty much we would need for a pre-qualification letter, we would need to see, I would say bank statements, 401k, whatever you have that's liquid assets. We would need to see that you have those ready to go. So, we can actually pre-qualify you and say that, yeah, they have enough capital to acquire this financing. Um, we're not doing any soft pulls on your credit to get you a pre-qualification letter.
I got you. What other questions we got? But they said, yeah, they said for the Baltimore program, they all gonna be full of guts. But I remember reading it was something about the $90,000 or something.
Hmm. Yeah, so one thing I would note, for a fix and flip today, I would say an average property cost. I don't. This is very bold, but where I am, Petersburg is, I'll say, still in the five figures in purchase price, but that's
Mhm.
like the only place here in Virginia. So
Right.
maybe Hopewell. I'm not sure if anybody knows any local places in Virginia. Forgive me, but yeah, so most places here are already in the six figures and only going up. Like where I'm at, I think the average cost of a home is somewhere around $500,000. Um, yeah, so I would say for fix and flip, try to get it in that six figure range because that helps a lender, um, makes it look appetizing to a lender where they will want to have a hand in that. Because if the loan amount is not big enough for a lender, I'll say that it's not that they don't want to do it, it's they're not getting any meat on the bone from it. And so it doesn't make much sense for them to tie up their capital on smaller projects versus, 150,000 plus. I'd say, yeah, you're pretty, or even 100,000 plus, you're really in a good standing chance of getting approved from a lender, just based on your loan amount.
Mm-hmm. All right. A lot of questions about the credit.
Mhm.
What's the minimum? Yeah. So I guess you can answer that now. When I was asking about the credit.
Sure. So for fix and flip, I'll say for 85% purchase, 100% rehab, we'll ask that you come in the door with a 650. And now again, that's not firm. It is contingent upon location of the property, you yourself as the borrower, your experience, and so all that can affect the coverage of your loan. But I'll say that for credit wise, 650, but we can lend under that as well. But that's just for that particular program. So say that you even have a 600, we can do 75% purchase, 100% rehab. And even under 600, we have solutions as well. Just again, it'll probably cost you more in your loan. Long-term rental, we will definitely want to see at least maybe a 640. We could do maybe a little bit under that with if we get some reasonable explanation, I'll say, as to why you're at a 640, 630, why it's a little lower. And then for that, I believe that they will do 75% purchase. So I'll say the stronger your credit is, the more that they'll likely approve you for financing. Ground up construction, they want to see 680. So for right now, I'm trying to get a lot of our partners and a lot of our funding committees to please come down on the requirements for ground up construction. That is the one area where we've made some progress, but lenders want to make sure that you have GCs that know, to put the foundation down first before the drywall. So they if you don't have the experience that you've had homes built,
people don't know that.
I know they got to make sure. That's why lenders just, they have the requirements, but I'm just kidding. But if you don't know that, we're questioning if you should be doing ground up construction at that point.
Either on a slab or either a cross. Well, I wouldn't do a cross base, but when I start ground up construction here, I'm doing slab. I don't want to do basement unless the basement already there. If the basement's still there, I'll just go on top. But for the one I want to build, is nothing was there, so I will go on the slab.
Yep,
just have me like an access point in the floor, like in the dining room, in the corner somewhere.
I will say for ground up, we have lenders that will do that will take your GC's experience, and so say that, and I say experience. Experience for a lender would be how many times have you done what you're coming to us for financing for in the last 3 years? So for fix and flip, how many flips have you done in the last 3 years? For rental properties, how many have you acquired in the last 3 years? For ground up. Now, of course, a lender's not going to sit there and expect that everybody is a contractor doing their own ground up constructions. But if you've had them built with a contractor and your name was on the title, then that counts as experience for a lender for ground up constructions. So they want to see typically that you, the borrower, have done at least, probably 3 on average. But say you don't have that, right? If your GC has even built 1 in the last 3 years, they will count that as experience. Now, some will want the GC to be on your operating agreement to show that they have skin in the game, and some won't. So really, the stronger credit you have, the more capital you come to the table with, and the more experience your GC is, the better financing you'll have for negotiating grounds with a lender.
So what about in my case? I would be all the above. Like I would be a developer.
So you're good. Asia, you're special. You're a Class A contractor, and the A stands for Asia. So you're good. We'll get you qualified. So yeah. So for you, if you are a contractor, you are a Class A contractor, or you are a GC, that helps because that shows you know what you're doing. But even for a GC they're 9 to 5, that's where we're trying to get it with lenders here that that guys, these are GCs for their 9 to 5. They build homes. This is experience. Lenders just for some reason don't seem to get that. Not yet. So I'm trying to get them to understand that common sense statement that a GC is experienced. But that's where we come in, where when you come to us and you get lending through us, we have a little bit more negotiating ground with the lender through our relationships with them, where we can negotiate better terms. negotiate exceptions to your loan for requirements, like let's say credit, or if a loan amount is a little lower or a little higher than where a lender really wants to be in their comfort zone. As long as there's not like, 3 red flags for a lender in terms of exceptions, then, you should be fine. Like 1 or 2, I can probably work that in. But see, we have some comments on the screen here.
Yeah, I was gonna read some. So what about no doc loans? I've been seeing a lot of people talking about the. I'm probably
Yeah, so we do have lenders that will do no doc loans. That's, I'll say, more so where my father Donald would be able to step in a little more with no doc loans, because that's more so on the SBA side, where there are options for real estate with no doc loans. But I'll say with residential and even most commercial real estate investment property lenders, they'll want to see minimum that they do they'll want to do a credit check on you. They'll want to see the entity documents to make sure that, you're authorized to sign for the loan under your entity. So the lender has to do their due diligence as well through underwriting. So no doc loans, I can't say we have many of them right now, but we do have low doc loans where we don't ask for a lot. And typically I'll say, after you do your first deal with us, we have those documents on hand now. So half of those we don't have to ask for again. So it's a quicker process after the first time.
Okay. Or do you ask for tax returns or W-2s?
No, so we don't ask for W-2s or tax returns. So for fix and flip right now, there are a couple lenders that do. But we're trying to negotiate with them right now to stop doing that, because that doesn't prove anything. Unless they've turned it in with an IRS transcript, a tax return isn't going to prove anything. And I'll say a lender today really uses your tax returns to as a way to mitigate fraud risk. So that's their way of making sure that you're paying your taxes and that you're supposed to be here. Right. So, but a tax return can be faked without an IRS transcript. So, and most lenders aren't asking for an IRS transcript. So it's kind of pointless. But yeah, so no, typically driver's license, purchase contract, rehab budget. If it's a rental property, we want to see the leases on the property, security deposits. We have to do our due diligence to make sure that everything looks right, because there is a lot of fraud that goes on today. And especially with AI today, even my father Don and I were talking with a couple of investors, and that we all came to the same conclusion that probably in 5 to 10 years, one of the biggest industries is going to be fraud, is trying to get into financial fraud.
We got a question. Let's see.
Yep, what you got?
Oh, this probably towards me. Is buying houses at the sheriff auction a good financial move? Yes. Another question for you. What lending company is this? This is Brightview Commercial Capital, and the link is in my bio to apply. Here we go. Most lenders require $100,000 value for loan for the 75% LTV. Do they service mortgages where the homes are under 100?
I'll say it'll be case by case. So typically let's run a little math scenario real quick. If I'm a lender and you bring me a property that is worth $80,000, and we're doing let's say 75% loan to value, and I would say most lenders won't do anything above that. And it may even go lower on properties that are in the 5-figure range, because it's not, there's no meat on the bone for them. There's not much that they're making on a loan like that. So even let's say on an $80,000 property, you take 75% of that, and that's being generous. That's a $60,000 loan. And typically these lenders, for a refinance, for cash out, want to see you do that for 30 years. And so on a 30-year payment on a $60,000 loan is just not worth the long run for a lender. So typically I'll say $100,000 and up. So a way that you could maybe increase the value of the home is I want to say maybe acquire a bridge loan perhaps, where you could get some funds for rehab work, or maybe even a delayed purchase, or really, if you bring us the property, we'll find a solution for you that works really well. Or even again, maybe if it's not enough of equity in the property to pull cash out, maybe go back to the 0% interest credit cards. At that point, you could use that to rehab the property, get an appraisal. Now you have a new higher amount that your property is worth, and pull some cash out that way once it hits that threshold.
Yeah, because that 0% interest card is perfect for Detroit, because typically I tell people for Detroit now you probably gonna be all in probably like 55 to maybe 100,000, but with 70,000 you can get you a nice little brick bungalow that hit you for about 30. Put another 30 and so in it, and it's gonna sell for at least 100 or more, because the average sale in Detroit right now hit over 100,000. I think like 2 years ago, which is huge for us, and that's actually good for like the affordable housing crisis, because people can get a mortgage that they can afford between 100 and 150. And I think a lot of people who flip in Detroit not really understanding that. Like they going for the super higher end houses in your Rosedale Parks, or even Morningside with some of my properties that where you can get 200 to 240, or high 100s or whatever. But a lot of people isn't catering to the first time home buyer.
Yeah.
That just need like a little starter house or something.
Absolutely. So I'll say statistically, 27% of the affordable housing market comes from real estate investors, comes from you guys. So you guys play a very important role and have a responsibility within the real estate community, where you guys are helping people, find homes, find places to live, and that's affordable. I know people don't like to pay rent, but would you rather pay the $1,500 a month rent with security or first and last, or would you rather pay the $60,000 down payment on a property and then pay your mortgage long term? Not everybody can afford to do that. So property owners, landlords definitely help people stay housed. You guys are very important.
What other question we got? So qualifications are determined only by credit score.
No, so I would say qualifications, the three that they're looking for is the property rural or in a high crime area. So not all lenders want to do that, right? So if it's in a high crime area, like Petersburg, for example, the outside HVAC units are getting stolen. And so for a lender, that's not appetizing. That's risk.
Y'all don't have to put the cage around your AC units?
What's that? Yeah, so they're starting to weld cages around the AC units now. That's not that's not something normal, guys. That's not supposed to happen.
We've been doing it.
Yeah, when I was a kid, you'd go outside, run around and play, and you'd see your AC unit. You wouldn't see it looking like your AC unit's in jail. So
no, we've been doing that up here. Now some people who got like a fence, like the nice white panel fence, they might not put the cage around it, but the cage is the
thing with the fence is that's not gonna deter somebody from breaking the fence and taking it. So it's sad that we have to go to metal bars and hiring welders to weld stuff around your HVAC unit, because that's just more expense. That doesn't help anybody.
We don't have you can either go to the welders and get the real nice one done, but you got a lot of places who sell the one already for that unit that's already pre-caged.
Yeah, so it is nice that there are solutions for that are coming about today, but all in all, it's it just risks like that are not good for a lender. But not saying that lenders will turn it down. It's just that's something that they do take into consideration, is the area that the property is in. So I'll say that's just as important as your credit, because say you have 720 credit, you've done 3 flips in the past, but the property is in a high crime area. Well, the high crime area can instantly cost you 10% of the loan to cost in your loan. So a lender will see that as a risk. And so where sometimes you may qualify for, let's say, 100% purchase and 100% rehab, if it's in a high crime area, a lender's going to want you to have skin in that game, because they're not going to want to go in that 100% where there's a good chance that somebody will break in, They'll steal the materials. You'll get squatters. They'll steal your HVAC unit. It's really risky for the lender based on where the location is, really. So it's just as important. So your credit, your experience, and where the property is located are the three ones I'll say that help qualify you for private equity and hard money.
What are the typical interest rates?
Fix and flip, I'll say right now, I just saw 1099, believe it or not. And that's, I think, the lowest I've seen in quite some time, which is a good sign. But I'll say the highest right now I've seen is 12.5. But, with the better your credit, the better interest rate you'll get, and the more experience as well. I'll say maybe experience a little more than credit in this instance. But, yeah, I'd say anywhere confidently between 10.99 and 12.5. I'll say around 11 3/4 is around average right now for fix and flip. For long term, sadly, we're still in the 8s. 8.5 is kind of where the max is right now. If it's above it, something's wrong with the property or the loan amount, I would say. I want to say on the low end, low 7s. For more qualified, like higher credit, and you have a portfolio of properties and it's in a good area. And then for ground up, I want to say 12.99 is the highest I've seen right now. And the better the credit, I'd say maybe 12%, maybe just under it, 11 3/4. Ground up is kind of tricky because it's that short term with more risk than fix and flip. So lenders typically get a little more antsy with that, and so they want the interest rate to be a little higher. Same thing with refinances long term, though. The 7s to 8s right now.
Mm-hmm. Okay. I don't see no more questions. So, and I ain't got no more questions either because I think we kind of went over everything. This was dope. Thanks again for coming back on. I appreciate it. And I apologize for the technical difficulties earlier.
No, it's fine. It's fine. And then I have one more thing, if you don't mind.
Yeah, go ahead.
Sure. So, also, everybody, I want to thank you guys for sitting through me. I know I'm not the best speaker, but I try my best. So we have the brand new Facebook group that I put together called the Young Investors in Real Estate, and that's a Facebook group. So if you look it up,
yeah, I'm about to go in there now.
Let me see if I can. Can I post? Does it let me put? Yay! Let me put a comment in there. Yay! Let me see if I can't get the share code and put it in the comments section there for it. So really the goal of the Young Investors in Real Estate group is to provide knowledge, business referrals, and opportunities in real estate financing that maybe you can't find at a bank, and maybe that are more beneficial to you and that are new. Oftentimes when I tell people that, that there's financing available for real estate investment properties, they're like, what do you mean? So, I mean, it's just another way that I know that my job is not as mainstream as it should be, because I feel like everybody should be able to know that when you get turned down from a bank, that's not the end of the line.
Mm-hmm.
So really my goal for Young Investors in Real Estate is to get more of the youth into real estate and get the stigma removed from the youth's minds that with today's market, I won't be able to get myself into a house and own it until I'm 45. That's just not true. And I hear that so often today that, my parents were in such a better market back then when they were, younger. Oh, I should have bought a house in 2003 when I was the age of 4. There's loan programs out there, not only for investors, but for owner occupied, where you don't even have to put down a down payment. And I just think that it's funny to me how this is just not that light, like no light is being shed on that. And so that is what I'm trying to remove. And that's the ultimate goal with this group, is to allow our youth to know that they have a chance, and that stigma just needs to go away. That mindset just doesn't help anything. If you put your mind to it, I'm 23, right?
Mm-hmm.
I'm loaning money to people that are doing investment properties for their 9 to 5, for fun, for whatever, for their investment. If I can do it, you guys can go get your own properties. It's not impossible.
Agreed. I meant to ask you this real quick. What about doing do y'all do tiny homes?
So for tiny homes
And modular.
Modular is a little bit harder, I'll say. It's not very lender friendly, I'll say, not at the moment. So we're trying to have discussions right now with our lenders for tiny homes and for for modular homes, as well as storage container homes. I'm starting to see those pop up a lot more in the West. And if anybody hasn't seen the Pacific Bin in Washington, I would definitely go recommend taking a look at it. It's definitely a good build. So for tiny homes, that's probably likely to get approved, more likely than a modular home, just because of it has better negotiating grounds, I'll say, with a lender, with the risk, because it's cheaper to put them together. It's easier to find a tenant. It's just more appealing to a lender than a modular home right now as to, the overall aspect of it. So, if you have plans for a tiny home, I would definitely shoot it over to us. If you want to look into it for ground up construction, we can definitely take a look at it and see what we can do. But again, if it's going to be under a loan amount of, I say 100,000, I would try to see if we can fit a little bit more into your budget, just to make it more appetizing to a lender.
What did you say the interest rates were again? I forgot. I'll make it
for which one?
Just overall, like the minimum.
I would say the interest rates for fix and flip, highest I've seen 12.5, lowest 10.99. Long-term rental and refinance, both cash out and rate term, we're in the 7s, mid 8s. Ground up construction 12.99 to 12.0.
That ain't too bad.
Yeah, so we're actually starting to come down on the rates a little bit because ground up was in 13 a couple months back.
Okay.
Yep. So I'm not sure if you can put this in the chat as well. This is the link to the Facebook group for young investors in real estate. If anybody wants to join, we're so close to 100 members. We're at 89 right now, and I started the group less than about a month ago, I think.
Yeah, I'm about to join.
Awesome.
And I'm gonna post a link because a couple people was asking on live what the name of it was. They didn't catch it. So
yep, that'd be the Young Investors in Real Estate.
Right.
And so the picture for the real estate group is is a house, a miniature house. In the background is larger homes.
Real estate Facebook group. All right. Let's see. Questions. Marty is my partner. I sent him your live stream until I've been following you for a while, and since we're both from Detroit. Oh, no problem. Thank you for sharing it. Appreciate it.
Absolutely can. She seems very knowledgeable.
Thank you. We got one more question. Are there any guidelines for bankruptcy chapter 7?
I would say so you're talking about bankruptcy now, right?
Yep. Can you do funding with bankruptcy?
We can do funding with bankruptcies. That is a very good question. I would say it would have to be I can't think of the word. It starts with a D. Is it dissolved? Not dispersed, is it?
I know what you're talking about. It's like dissolved entities or something like that.
Something like that. It has to be solved. The bankruptcy has to be solved. And I would say if it's been solved and there's 3 years that has passed, typically that's good for a lender. If you just got out of it last month or last year, I would find a partner very quickly that has not been in a bankruptcy. Because at that point, you can partner with others, but I'll say with joint ventures, say that you have low credit and you're using someone else's to bank off of for better financing, or you have a bankruptcy, I would say have less than 20% ownership on an LLC if you're doing a joint venture.
The word is discharged.
Discharged. That's it. Long day. Forgive me. Discharged, yes. As long as it's been discharged and some time has passed, a lender's okay with that. But again, don't let me deter you and shut you down right here. If you come to us, we'll definitely take a look at everybody that comes to us. We don't shut anybody down immediately. We definitely take a look at everybody that comes to us. We're very equal, very fair, and we want to give everybody a chance to make the most money they can off of financing. So.
All right. One more question. Do you refinance owner-occupied properties?
We do not. So as long as I'll say this, we can finance anything as long as you don't in it from the size of a condo to the size of a hotel, if not an apartment complex.
Okay. One more question. Do you guys fund cannabis projects like private social clubs, dispensaries, etc.?
Man, I never thought I'd get that question. But yes, so we can actually fund cannabis, planes, churches, all the stuff that lenders don't want to, not lenders, banks don't want to touch because of risk. Cannabis is still federally illegal, but there are lenders that do recognize it as a cash cow in certain states, and if it's illegal in your state, we have to respectfully decline because we don't want to go to jail. IRS is not fun to fight, or the FBI, so no thank you. But if it's legal in your state, definitely give us a call and we can see what we can do for you.
Yeah, it's legal here in Michigan. They everywhere now.
Yeah, I was about to say it's legal in Virginia up to a certain point. I think you can have up to 3 plants recreationally.
I don't know nothing about all the legal, but I know they popped up here. Like, we got a cookie tier.
Like, yeah.
If you ride down
yeah. So dispensaries are popping up a lot more. So I can imagine the federal government will probably find a way to tax, cannabis and make it legal that way, as long as they can make a profit off of it.
Yeah, they like you ride up and down 8 Mile here, a lot of the old car or like buy here, pay here, no matter what your credit was, you pay 30% interest on the car note, all them done turned into weed places. They everywhere.
Yep, starting to pop up. That's just where we're headed in the future.
So what's the word in commercial project lending? Was that a yes or no?
Commercial project. When did we talk about commercial project lending?
Oh, earlier I think they were asking about the percentage. Like, do you got to bring to the table? I think they were saying like the average is 20%.
Commercial project lending, that's a little bit tougher. It really depends on what we're trying to do in terms of commercial. So I'll say anything that's 4 doors or more. So hang on a second. So is it?
Oh, you mean cannabis commercial project?
Cannabis commercial project. So that's would probably be case by case. I don't want to give a number and it be false. That would probably be something that would fall under an SBA or maybe an MCA. So SBA has different rules than this industry of non-traditional investment property lending. So I would definitely say if you have something or you want to get a quote for that, we can definitely take a look at what you've got and see what's available through the SBA.
Okie dokie. Hold on, got one more. What if it's a nonprofit?
Yes, I could probably count the number of lenders on just one hand that will do nonprofits. So it's really depends on what the nonprofit is. We've done churches; they count as nonprofits. There's not a lot of lenders that will want to do churches, but somehow we've managed to fund 4. So call us the miracle lenders. There's ways to do it. I would say there's a solution. So if you give us a call, we'll find a solution for what you need for financing.
Someone wants to know: do you lend on properties under 100,000? That's turnkey.
That's turnkey. So that doesn't need any rehab.
So a turnkey is more than likely rehab with a paying tenant. That's turnkey.
Rehab with a paying tenant. Well, that's the thing. So a lender will probably not want a tenant in there, just because of the liability and the risk, you know. So I would say, I don't want to say no confidently, but it's not looking good. I'm sure there's someone out there that we can find that will find that's what they want to lend on. But right off the top of my head, I can't think of anybody that does turnkey properties.
Well, see, that'd be good for me if y'all do, because a lot of my fix and flips are turnkey.
Mhm.
So I cater to invest, like that's my niche, and I just been sticking to it and running with it. So I buy a house, rehab it, get the city certification, put a Section 8 tenant in there, and then I sell it like that to the
Right.
end buyer. So if I can find a lender that'll finance that, we can make a lot of money.
That's what I'm saying. So for private equity and hard money, I can't say I've came across any. It may just be I haven't necessarily looked too far into it, but um, I would say that again, that's where the 0% interest credit card may come into better use, because at that
Yeah.
point you're your own lender, and as long as you have somewhat decent credit, you'll qualify. Well, I shouldn't say that. Somewhat decent credit as well as decent household income. They will, you'll probably qualify as long as you don't have a lot of overhead, and credit card debt or something like that. You should be able to qualify for a decent amount where it should be good for rehab, I'd say. So that way you could, work on the property while a tenant's in there.
Okay. I guess they want to know if it was vacant. I guess you will lean on that, of course, because it's vacant. It's a flip.
Yeah. So we can also do vacant, vacant properties that are investment properties for cash out refi, as well as rate term, or if you're looking to purchase a property that's vacant as well, doesn't have a tenant. It'll just probably cost you more in the loan, because that's a risk to a lender. You don't have anything paying, the asset is not paying anything at that point. So as long as you have plans to get a tenant in there to start producing rental income, lender's typically okay with that.
But I got a question about the 0% credit card, because I know I would use that for my turnkeys, because that's smaller amounts. I can't technically go swipe for a house, so can I like pull the money off or anything like that, or do y'all do balance transfers?
I believe you are able to. Yeah, you can't swipe for a house, but you should be able to provide the details for the account where the credit resides, and they would essentially, I would think they would take it out like an ACH transfer.
Right. Okay. All right. That's easy. Yeah, because I was wondering, because I know the ones I've done like Chase, they literally send me checks, and then I just write myself a check and then go do what I got to do.
Right. Yeah. So these guys are used to. So I say these guys. So the credit card company that provides that type of credit is specially there for real estate investors, and so they know that you guys are using it for these purposes, and so that's why they provide personal and business line of credit for this. And so they've got at least 25 different programs for these lines of credit. And so I'll say that, once we get you pre-qualified, which the link again should have been put, I believe it was put in. Yep. Yeah. So the link there from a little bit earlier will get you pre-qualified. And again, once we know what you pre-qualify for, you bring it to me. We'll get you connected to a credit card specialist from their company. You won't get 1,000 calls for credit cards from other credit card companies. This is their pre-qualifier. I'm going to hook you up directly with one of their agents. They are the most prompt credit card company employees I have ever seen. They answer the phone. They call you right back. They call you back when they say they're going to, and you can reach them. I mean, if you have any questions, they're very helpful. And so they're very knowledgeable, very experienced, and we definitely prefer them for lines of credit.
Okie dokie. Let me see if we got any more. Instead. How do I? Yeah, I can answer that. Is he nationwide? I'm in Baltimore. Yes, he's nationwide, and I forgot what two states you said you. It's not that you don't work there, but it's like a little difficult.
So the harder ones to lend in are Alaska, Montana, North Dakota, South Dakota. That's because they're rural, so it's lenders. It's a bigger risk because of the lower population. So we'll still do loans in those states. It'll probably cost you more in the loan because it's riskier. That when you put the house on the market, it'll you won't find someone that'll buy it in a population of a town the size of like 200. So. But yep, we'll do it.
I got you. I think let me see if there's any more on YouTube. They was talking about the cannabis. It's a social club, so I guess they want to know if you would land on that.
I can't say on a social club. It would have to be able to show some sort of income.
Well, I would think with a social club, don't they got to pay like a membership or something?
Yeah, but it'd be more so of a commerce based. So a social club where members pay a fee if that's part of their services, maybe. But I can't say right off the bat if a membership would cover your required DTI, I'll say debt to income ratio, that you would probably need to display for a cannabis business.
Okay, and what are your hard money points?
So we put points anywhere from, I'll say, 0 being the lowest and 3.9 being the max. We pride ourselves with saying that even if we do have to broker, and which is not often that we really do at this point, because now we're direct lenders. 3.9 is the highest. We pride ourselves in never going over 4%, and we don't broker stack either. And so, it's, I know there's a lot of common practices out there where you have like 5 brokers working on one deal, and it's just like, what the heck? But so our points are really easy. So we generally charge, I'd say, anywhere between 1.5 to 1.9% personally, on top of whatever perhaps a lender would if we have to outsource it.
So it's not 0 to 3%. It's the 1 to the one you just said.
Well, no. So there are ways that we can do 0 to 3.9. It just would defer in the interest rate if that would be an option based on the program that we go for. That'd be best.
Okay. When is the first payment due on fix and flips with hard money?
I would say after closing. That would be that can be negotiated between you and the lender. So it can be first of the month. It can be on a certain date. Really, when we get the loan process started and we get everybody talking, we figure out what works best for everyone. Lenders don't typically have a firm date of when they want to have your payment in, because they want it to work for everybody. If you can get it in the first of every month, or the last day, or middle of the month, or the 23rd, they're generally pretty flexible.
Okay. Joint Lake, sorry if it's a duplicate question, but do you all have programs that can include the rehab costs? I would think so.
Yeah, so that's that. So fix and flip. Yeah. So fix and flip would be purchase plus rehab.
All right. Any more questions, y'all? This was good though. Thank you again for coming on. I definitely appreciate it. Yeah, we have to probably do this again, because I'm sure with the way y'all stuff probably changes. Probably, I would think, every quarter or something like that.
Yeah, so interest rates and loan programs do change. I would say even more frequently than every quarter. I would say even monthly at this point. With the economy we're in, it's just too volatile right now. So not only that, if you have any properties in Virginia and DC, we also have a title company. We have a direct hand in, as well as we're able to get insurance quoted pretty quick. Quoted and bind actually within 24 hours. So if you guys need a good insurance person, we have that in-house as well. Just feel free to reach out. Mind if I put my contact information out right now?
Yeah, go ahead. And I put it in the caption too.
Awesome. Yeah, so if you guys want to reach out to me, my phone number, call me, text me anytime. 804-767-0573. And again, that's 804-767-0573. My email is Tom, that's TOM, at brightviewcommercialcapital.com. Again, that's Tom at brightviewcommercialcapital.com.
All right, y'all. So for those that's not on YouTube, you go over to my YouTube channel, Disney Construction Services. All of his info is in the caption, as well as the link to apply for any funding, and the link is in my bio on Instagram. We have one more question. Interest only payments, right?
Yes. So they'll do interest only payments on fix and flips. Yes.
And what is the name of the title company in the DMV?
DMV area for a title company, that would be Hazelwood Title and Escrow. Tell them that Brightview Commercial Capital sent you, and they will be more than happy to help you out.
Alrighty. Any I guess closing remarks or statements?
Thank you guys for being investors. We appreciate all of you guys out there. You guys keep the affordable housing market going, and we would love to work with you guys and help everybody make a good bit of money. So thank you guys for being here. Thank you guys for listening to me. And I hope to be back. So thank you, Asia.
For sure, because this is what May. So I guess just let me know like as soon as whatever changes on your end, and we could do like a round 2, 3, 4, whatever. It don't matter.
Sure, absolutely.
All right. Oh, we did got one more question. Did you go over the DSCR? Yeah.
So DSCR loans, I will say a lender wants to look for a 1.1 ratio for your rental properties. I'll say we can go. We actually just had somebody ask if we do a 0.7. We do. There's not a lot of lenders that will want to do that because first question I can already hear they're going to ask, holy heck, how did they get it to 0.7?
Right.
That to be like, it's a long story, but yes, there's ways we can go beneath a 1.0, but typically try to aim for that 1.0 and even then try to get a little higher than 1.0 because 1.0 is kind of the standard barrier that a lender is looking for.
Okay.
Yep.
Oh, what's the lowest loan amount of a DSCR loan?
I would say really it'll depend on, I don't want to say your credit would be a whole big of effect on there because at that point it's DSCR, but you'd have to bring it to us because I've seen us go pretty low. Maybe 50% is the lowest I've seen, but 65% if it's under a 1.1 but higher than a 0.9, I'll say. Anything above a 1.1, you're looking at generally a 75%.
Someone says I have one right now for $60,000 that he needs a loan for. But you said y'all don't do 60, right?
Yeah, so 60,000 is a little. Yeah, there's no meat on the bone for that for a lender.
Mm-hmm.
Yeah, so for that point, at that point,
so what?
Again, I would look into the 0% interest credit cards if you really need capital sooner than later.
Okie dokie. I think that was it this time.
Awesome.
All right, cool. I'm gonna send you a follow-up email, just thanking you and stuff like that. And I'm about to get out of here because I'm hungry.
I hear you. It's almost 8 o'clock on a Friday, guys.
Yeah, we got a long weekend this weekend, but I'll probably just be in the office doing some work. I gotta play catch up.
Yep, doing the same thing right here. Awesome.
Yep.
All right. Well, thank you for having me, Agent, and thank you everybody for listening.
All right, thank you so much for coming on, Tom. You have a good weekend.
Thank you too. Happy Memorial Day.
All right, you too. Bye-bye. All right, y'all. Thank y'all for tuning in. A couple church announcements. First and foremost, I want to thank Tom again for coming on here on this fine Friday evening on this 4-day or 3-day, however many days you want to do weekend. To my subscribers on Instagram, I will leave a live there for y'all to go back and replay and watch and take notes. And for everybody else, y'all just gonna have to go over to YouTube where it'll be posted at. What else? Detroit Real Estate Weekend. First weekend in August. The link is in the caption to get your ticket today. For those on Instagram, comment the word Detroit on one of my posts and it'll automatically get sent to you. AI has been tripping, so I got to go back and see why it's not showing for everybody. Or click the link in my bio to get your ticket today. If I don't hit this quota, I'll probably cancel it and just give everybody their money back. And then the next one I will do will be out of the country. I'm working on planning one in more like a mastermind. It's going to be intimate. and do it out the country. I'm looking at either Cancun or Panama. I probably have more details pending how this one goes. But yeah, I think that's it. Thank y'all for tuning in. Everybody who sent the donation on Cash App, thank you very much. The good Lord's gonna bless you today. Yeah, this was a dope live. This was dope. I can't wait to have Tom back on here. I'm gonna try to get him out for Detroit Real Estate Weekend, but I didn't want to. I gotta wait to see like how many stuff he's gonna have. I mean, people gonna show up. Also, Real Estate Fridays was canceled today due to this being Movement Techno Weekend and Memorial Day weekend. I'm pretty sure we weren't gonna have a good turnout because of what's going on, or we might have. I don't know, but I wasn't about to, spend my money to find out. The next one will be next month, and the topic will be the Joe Louis Greenway. I'm going to make sure I record this one so I can put it with my course that I'm doing on the Joe Louis Greenway that I'll probably drop sometime this summer. That would basically show y'all where to invest, how to invest over there, and everything. Now that the weather finally broke, I could start filming for it. But Real Estate Fridays is always free. We just ask that y'all come and spend at least $10 to $20 with the establishment because they letting us have it there for free, and that's all that we ask. What else? I'm trying to get some people who is on the planning department from Joe Louis Greenway to come speak as well. So if not, it'll just be me doing my presentation on it for just the stuff that I've researched myself personally. But that's about it. And that's free. July's topic, I'm not sure. I might have Deshaun speak on the container homes and the using your VA loan to invest because he's real heavy into that and teaching people how to do that. And then what we got August. I'll probably cancel that one too because that's the same weekend as Invest Fest. And I'm pretty sure ain't nobody gonna come. Cause hell, I might even be in Invest Fest myself. And then September, we'll probably do the speed date working one again. That one usually a hit. And then it's an October one, and then that's normally it till January. But it's a lot going on in Brightmoor. Whole lot. That's gonna be part of my probably Joe Louis Greenway thing too. I gotta look at the map. I don't remember if the Greenway coming through there or not. It might be because of all the open land. I just don't remember offhand, and I don't want to misspeak. But I think that's it. Thank y'all again for tuning in. Have a great weekend. Be safe, Detroit, or be safe wherever you at, but specifically Detroit, because that's my city. And have a good weekend, y'all. Deuces.